Welcome back to Bloomberg News. Stocks are going back and forth between gains and losses today as investors digest the Fed's hike of the discount rate and a less than expected rise in consumer prices. Linda Duessel is equity market strategist and senior portfolio strategist at Federated Investors. She joins us now from her office in Pittsburgh with more. And first, Linda, thank you for being so gracious. You waited through that interview with Congressman Issa. We appreciate it.
Good afternoon.
Good afternoon to you. That Fed move yesterday, was that unexpected?
No, it was not unexpected. I mean, they suggested that they would do it. They just were surprised by the timing of it. I really don't think that that's that big of an issue for the market. Obviously, we're in the plus column now. The volume has been low for the past several days, and the 3 days of a rally that we just had were the best rally we've had since November. So low volume, nervous pullback, that's okay. And I think today, at this moment, we're up over 1108, which is a pretty good resistance. Close here, it's good.
Yeah, absolutely. Was the Fed sending a sign, as Chris Rupke of Bank of Tokyo Mitsubishi said, a shot across the bow? Was the Fed giving us a sense now that they may make some more determined moves as far as an exit strategy is concerned sooner rather than later?
Well, yes, of course, and Bernanke has said as such. We see the economy doing better. We have to remember that we were in an emergency situation, and they did many, many things that they need to unwind eventually. And to the extent that they're unwinding them, that is a sign that they believe that the economy is recovering and that the strength can last, and that is a good sign.
Is it necessarily a sign that maybe the next move might be the Fed funds rate?
I think that most people who follow the Fed and are listening to what they're saying are suggesting that no. And I think they're bending over backwards to tell us no, don't be expecting that yet. And actually, as we watch this market move up, and we believe we can still have a continued bull run, we think people maybe are going to worry too much about interest rates and maybe are worrying about the wrong thing and ought to be looking at taxes.
Linda, let's talk about that consumer price number that came out, CPI increasing 0.2% for a fifth straight month. What signal does that send?
Well, you know, after the PPI yesterday, which was higher than expected, I think maybe has people a little bit worried. It's an excellent worry, inflation over the long term, and we'll worry about that too. CPI coming in, as you say, for continuing a string of being really quite benign, would continue to signal on all systems go. And as we're discussing the Fed and their need to raise interest rates, that would say to the Fed, you don't need to worry about inflation right here for having to raise interest rates, and that's good.
Well, we spoke to Aaron Smith, an economist at Moody's Economy.com in your neck of the woods in Westchester, and he said that the broader picture remains one of subdued inflation. That gives the Fed ample reason to stay on the sidelines until at least very late in the year. And also, we're also hearing from Dan Greenhouse of Miller Tabak. He says that the data such as the CPI today arguing for continuation of the Fed's supportive policies. Is that basically where you're coming from as well?
Sure, we would agree with both of those cases, and our own bond department here at Federated Investors is suggesting not until the third quarter at the earliest would they probably have to raise interest rates.
Right. Linda, in about 20 seconds, you have a commentary today. You say it's the states that we should worry about. Just give us a quick sense of what you're talking about.
Well, again, as I suggested earlier in our discussion, we're so concerned about interest rates. Really, we need to worry about taxes. We need to worry about deficits, and there's a lot more of that discussion going on. The states, as you know, unable to print red ink like our federal government is, are going to have another big problem this year all around the country. Got to watch for that.